Amidst a robust economic data and a general expectation of 50 basis point rate hike, the US dollar witnessed a 2.7% loss during the course of last week's trading session. And it's on this note I welcome you to yet another video tutorial for the new week. In this video, we shall be taking a fresh technical dissection on the XAUUSD. And since this is going to be a follow up detail to my previous analysis, I would like to share with you some key moments that we had during the course of last week's trading session before we go into the details for this week. And talking about that, during the course of last week trading session, we were able to make some couple of profits as price action moved significantly well in our favor. And in fact, the XAUUSD will be considered to be the most profitable trade for us during the course of last week. So, talking about last week, the first situation we had here, I shared a commentary at the beginning of the week where I was able to spot a structure between the 1,814 and the 1,807 dollar level. And one thing we understood at the beginning of the week was the fact that this appearance of buy pressure around the 1,807 was a beautiful signal that there is a likelihood that a bullish momentum is likely going to be coming in for the week. So we have to position ourselves in such a way that we can catch this move if price action either breaks out of the $1,814 level to buy the XAUUSD or a breakdown of the 1,807 to sell the XAUUSD. And let's see what happened afterwards. Then we saw the breakout of the 1,814 for the first time for the week, triggering our buy position. And as soon as price got into the 1,820 level, we begin to see some selling pressure around that area. And it's what at this point I shared that we should secure the current buy position and thinking that the continued selling pressure here might likely incite a sell off in this market if we take into consideration what has been happening here in the last 3 to 4 weeks. Now we started seeing the situation where the sell pressure continued. Price action broke to the downside, triggered some of our sell positions right below the $1,814 level. And look at what happened afterward. We saw a sharp rejection of the 1,807, further giving us a confirmation of the strength of the buyers at around the 1,807. And it was at this point we decided that if the buy pressure here continues, in such a way that price action finds it difficult to find a new low, then we shall be anticipating a buy position. And what we did afterward was quite interesting. We positioned ourselves right above the 1,814, where we said if price action breaks out of that trend line and the 1,814, it will be a beautiful opportunity to buy. So, with a buy stop order above the 1,814 level, we had our second position triggered, as you can see, and price action continued to find higher highs, breaking out structures like the 1,820 for another position to be added. So, we were able to take advantage of this move all the way up before some another wave of selling pressure began. Then the second key moment for buy opportunity came in on the 3rd of March, which appeared to be the first bullish momentum for the new month. And look at what we had here on the 3rd of March. We saw another opportunity to buy as we saw price action caught within the channel between the 1,835 and the 1,830 level. And I said we are going to be anticipating a buy position if price action breaks out of that structure, and if possible, a breakdown of the 1,830 will definitely welcome selling positions here. So with buy and stop order placed at the structure consecutive respectively, we expected one of the two to be triggered. And what do we have here? We saw the breakout of the 1,835 triggered our position, and at this point, we had the second phase of that bullish momentum happened. So we rode the move all the way up into our profit target at the 1,855. So if you do want to have a an examination of how we took advantage of this trade, well, I will be dropping the link in the comment section of this video for reference purposes. And if you are watching from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen. So with that being said, here let's dive into the current market structure. So right now we are on the daily time frame where it is very obvious here that price action has been bullish since this last quarter of last year. As you can see, since the month of October, we saw bullish momentum here as price action continued to find higher lows to further emphasize the strength of the buyers. And another bullish trend line I also have here around this area also shares a confluence with that 1820 where we started seeing buy pressure resume during the course of last week's trading session. Now, if you look at the structure critically well, you will see that price action started the new year at the breakout of the 1820, which I shared in my previous video on the XAUUSD. And what we saw here in the last couple of weeks after price testing the 1950 level, we saw a huge crash, bringing price back to where it started the new year. So we had a situation here where price started trading around the 1820. I think this lasts about 2 to 3 weeks with some level of consolidation phase around this area. So right now, price was back at the 1820. So let me zoom into the current structure and let's see what we have here. So during the course of last week's trading session, we were lucky enough to be part of this bullish move as price action climbed to the upside back into the bullish trend line that was broken a couple of weeks ago. And well, if we look at this from a technical standpoint, whenever we do have a breakdown of a structure, something just like this bullish trend line, we expect that one point in time there is a likelihood that price will come back to do a retest of that structure. It could be the retest of that trend line or the 1860 level to incite another wave of bearish momentum. But this is from a technical standpoint anyway. It's a theoretical part of the technical expectation here. But one thing that called my attention is the fact that a bullish momentum resuming above a strong demand zone is something that might likely incite another wave of bullish momentum here. So, with this two informations in mind, it is very obvious that we are at a critical point in the market, and the 1860 level will definitely be serving as a yardstick for trading activity for this week. And why have I said that? If you look at the structure critically well, you will see that the 1860 also shares a beautiful confluence with that trend line. So, what this simply means is that there are two things that could happen from this current structure. We could have selling pressure resume below the structure on our lower time frame during the new week to incite a sell-off in this market, or we could have a situation where price will climb above that bullish trend line and the 1860, followed by buying pressure above the structure to further emphasize the strength of the buyers in this particular market. So these are the views we shall be looking forward to this week. And in order to have a better perspective into what is really going on here, I was able to identify some simple setups which was identified on the 4 hours time frame. And I think that the structures will be a very good yardstick to guide our trading activity for the week. But before I go into the lower time frame, I would like to share with you some couple of macroeconomic events that we have this week. And obviously, you know that we need some liquidity to drive whatever technical ideas we have in this market. So, in that regard, I will be to the economic calendar here. And the first macroeconomic event for the week is coming in on Tuesday, which is on the 7th of March, and we have the Fed Chairman Powell doing some testification on that day. Then on Wednesday, we have the ADP employment change for the month of February. And with the look of things here, it appears that we're having some level of positivity in the year. As you can see, the previous data came in at 1,000 and 106,000, and we have a projection of 168,000, which is quite impressive in that regard. So we shall be looking forward to see how the market is going to be reacting or responding to this. Then on that same day, we also have the Fed Chairman's Powell's speech too as well. Then if we fast forward into the last trading day of the week, that is on Friday, March 10th, we have the almighty non-farm payroll. And obviously, this is one thing everyone is looking forward to We want to see how the data for the employment is going to be coming in. And compared to the astronomical rise last month of 517,000, the consensus for this month is falling, coming in at a minus 35, which is not so good for the dollar. So we are going to be looking forward to see how participants in this market will be anticipating this event. Then on that same day as well, we have the Michigan Consumer Sentiment Index, which we already have a data for that, coming in at 67, though we don't have a consensus yet on this one, but I'm sure that as the week goes by, we'll definitely going to be having an update in that regard. So these are the macroeconomic event we are going to be looking forward to for this week. And obviously, we all know that participants in this market will be anticipating this event, and this anticipation will be reflected on the chart as price action. So let's scale back into the 4 hours time frame where we want to be looking at the chart from a technical standpoint. So scaling down into the 4 hours time frame, this is what I was able to identify here, and this is what we shall be using to guide trading activity for this week. Well, the first thing you would observe here during the course of, I think, throughout the course of last month's trading session, it was very obvious that price action has been bearish. And to further emphasize the strength of the sellers here, we have this bearish trend line figured out after connecting the series of lower highs. And during the course of last week's trading session, we finally saw the breakout of that trend line to further confirm that the trend line is no longer strong enough to continue to hold selling pressure here. Then another thing I would like to share with you, which I newly identified on this chart, is another bright bearish trend line here after I projected this one into the future. And what we can see here, we have the first touch here, then we have the second touch, which happens around this area. And if we zoom in, you can see that we already have that trend line broken to the upside, giving us a little clue into the strength of the buyers at this point. Then, if we further look at what happened around this area, that is throughout in the last 2 to 3 weeks here, we saw some little consolidation phase sitting right above that strong demand zone that we identified on the daily time frame. And if we take a technical dissection of that consolidation phase, what will you see? So, following this impulsive move to the downside, it appears that price action has transitioned into a reversal pattern, which is coming in with something like a inverse head and shoulder pattern, where the neckline of the reversal pattern here falls at exactly the $1,845 level, which has been a major determinant of price action in the past. And with the breakout of that neckline, this is a beautiful signal that the reversal pattern at this point is very, very mature. And in addition to the breakout of that neckline is this ascending channel I was able to identify at this point. As you can see, after connecting the series of higher lows for last week, we have the support line of that ascending channel. And when we connect the higher highs of the channel, we have the resistant line sitting around this area. And price action has consistently respected the structure, leading to the breakout of that neckline area at the 1845. So, what are we going to be looking forward to going into the new week? Well, like I said on the daily time frame, we are at a critical point where the $1,860 level has been serving as a strong selling niche in the past. So, we want to see how participants in this market will be reacting to the structure to decide if we are going to be selling. And if a further breakout of the structure happens to the upside, then definitely we shall be adding more position to our existing trade. But be rest assured that I will be jumping right in the comment section of this video to give you an update of what my expectations are after monitoring how participants in this market will be reacting to this current structure. I hope this video has been of immense help in making your personal decision on the XAUUSD, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you can be part of my daily commentaries in all of my videos. Thank you for watching, and I look forward to seeing you right in the comment section. Bye bye.